Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to use these to form your own financial conclusions and make your own financial decisions. Today is Wednesday, September 22nd, and this is Blockhead Traders Weekly. This week I'm joined by fellow Blockhead trader Viper XL 007, and what a week it has been so far. Everything was pretty calm last week, a little bit of a slide, not too bad. We talked a little bit about hedging last week, waiting for some trades to set up, and then came Monday and the rain started to fall. So we're going to take a look this week at a couple of active plays that we have going on. Might take a little bit of a visit back to the hedge that we talked about last week and see what's happening. But before we hop to all that action, I'd like to give a shout out to our Discord. You can find a link in the description below. This episode is being streamed live to our members of the Discord. There is a free and open to anybody who wants to join. Additionally, there's a link to thetagang.com/sprocket888 where I post all of my trades publicly, the good, the bad, and the ugly, so you can see what I'm trading. But let's get to this week's action because there has been a whole lot in the market. Viper, I think you got caught up in a lot of this stuff. So what's going on in your camp?
Yeah. Monday was a big retracement of sorts after a big run or slight correction. So what I wanted to look at was we talked about hedging on last week's episode, and then another key point that because I've said last week I'm not actively hedging or anything like that. There's a lot I could improve on there, but things like Monday really emphasize the importance of your entry points and your exit points and how that can be dictated by price levels and price action and things like that. Because if you enter, and we like picture two levels or something, and maybe you didn't identify the levels and you just kind of jumped in because you liked something. If you jump in mid-level and something like Monday happens, you get squashed. And so what I thought was interesting in my portfolio as it happened Monday, I was feeling the pressure 100%, but none of my plays popped, to the downside. It was just everything got stepped on, and the levels that were the levels I identified when I entered the plays all held up. And some of that is, luck, like we've talked about before. I mean, they could have easily popped through, but it was also, slightly conscious on my part to, pick important levels to get into and whatnot. So what I wanted to walk through was just kind of some of those plays, where they're at, and why, why entry points are so important, as well as exit points. So let's hop over here. And take a look. So the first one up here was brought to us, to all our attention from the charter in chief in Discord. And I see he is actually checking it out right now. So anyways, he kind of brought this one to our attention. And I mean, this one, I mean, you can see Monday. So Monday's action here, this is the one thing that was just going nuts to the upside on Monday, which was awesome. Really helped.
I bet that felt real good.
It really helped, be like, all right, at least something's winning today. And you can see this wick up here was just, it like I thought about just, taking some profits up here, but that wasn't the play. So I held on to it and I sucked it up and took that slight, retracement back on the hang on. So I just sucked it up and let it come back down. That was a big run on Monday on this one. But anyways, so what I wanted to show is the shares that I took. So around at 28.03, somewhere at $28 is where I bought the shares. Bought them approximately, I didn't fully check, but it was somewhere around this time frame. Um, and, from the chart, the main thing here was this is, a fairly decent level. You got all these sweet dots going on here. Um, and so you can see, I mean, as far as levels go, this is, towards the bottom. So the play here is for the gap potential once we kind of clear this peak here. But the thing that was holding up was the selection of this level being towards the bottom, where there's always risk of breaking through. But in this case, it didn't get pressure. It ran up, and now we can see that we're actually kind of getting more confirmation of this area for support to the upside. Very clearly now going into uptrend pattern here. So this one is going great. It'll probably retrace a little bit, but what I'm really looking for is when we start to get up to here. I may trim the position as we test this level, and then once we get a close above here, that's what I'm really looking forward for. When we can potentially get that jump up. But all in all, not a whole lot interesting happening here, which is good because it's just
what's
doing its thing.
your exit play on this one? Like, did you put any sort of stop order in there, or are you just kind of watching it? Like, do you have what's the bail?
Yeah. So currently, what I don't want to see is losing. I believe it's right in this area. I don't want to see losing that level. We kind of dipped down a little bit here, but we didn't, it's still relatively held its support. I believe, so I have a stop loss set, and I believe it's set somewhere around this bottom level here. Because when we get some closes down in that direction, that's headed the wrong way, not the play. But it was not an OCO order, so I don't actually have an open order on the upside, which is why I mean just kind of have this monitoring. Now that it's on the run up, I'll probably cancel that stop loss and put a limit sell as we get closer to this next level, because I do expect a test and a kind of a stalling, and it could get rejected. It absolutely could do that. So that's why I want to kind of lock some of those in. And like I said, when we get this clear on a close, then now that is beginning to potentially turn the level and go to the upside. So that's the main play there. Another one that I've talked about a lot is FSLY. We talk about this one in previous episodes quite a bit. This one, it held up, to the pressures. Well, it held up a little bit to the pressures on Monday, but this one is the one of the 4 plays that I'm going over that I still don't like where it's at. So the dark yellow line is where I bought my shares, and I bought them back around this area back here, where we were clearly, at this new level. We got a good pump up. I am regretting, not taking, not having some limit sells up here to kind of lock in some of these profits. I was, shooting too big. I mean, it makes sense why it rejected off of there. We can clearly see over here that, that is part of the next level that needs to be overcome. So it makes sense that it came up there and got rejected back down. And then, now Monday, it kind of broke down. And we're getting in that range where I'm not, we're kind of breaking down. We're still very much in a downtrend here. We came back a little bit today, but I don't like the potential to continue the downtrend. So this dotted line, I actually reduced my position in half, and I have the bailout to kill it all down here around the 41, somewhere in there. But this one, it came back a little bit yesterday, as you can see the top of the wick there. Obviously it was still a down day in the end. So of the 4 plays, this was the one that, gave me the most concern on Monday, and still hasn't come out of its downtrend. And I'm not very happy with that. And so now I'm kind of setting my sights on getting my exit strategy out of here. I'm done messing with it as long as this downtrend continues. One more close down below this previous low is probably, where I'm looking to get out, because that'll certainly be pushing up, towards this next level. On the option side, so I have two options plays that have been doing not bad, but also, pushing the line or a line. MVIS here. So I have a naked put at the 12, and we can see. So the reason I picked the 12 is if we go back, this is clearly a pretty solid support level here. We've come back multiple times, given it multiple tests. Fell a little bit low, fell back down to this 980. But in general, we've regularly come back and gotten support off of it. So we've launched these swings off of it, and we're coming back. And the general retrace of this last swing that we had, we haven't really. We're still our highs. We kind of stalled out here, but we haven't broken any new highs. So we're still very much in this downtrend, which is potentially concerning. But currently I have the naked put open. It's October's monthly. There is, I should have charted the break even on the premium I collected. But offhand it was around 10, because I think any of these naked puts I usually put on MVIS. I like to get around a $10 break even to kind of take us back to that next level. So technically, I can still, we can break this 12 and I can still hold out for my break even. I don't really stick quite to the bailout that Sprocket does of the double, double the premium.
Yeah, double the credit received.
Yeah, double the credit received of on the downs of lose double the credit. I haven't really stuck to that because that's a mental game. But we can see here, Monday's pressure came and we came down to this 1224 was the level I actually charted. This 12 is just what the options contract was. So we kind of pressed down. But we got our support back up and we closed today above the 1224. So looking to see if that holds. So far it's got, showing signs of support. But the big test is in the next few days here. As we've tested this recently, come up, come down, kind of tested it again. So we're at it again. We'll see what happens here. But so far, going back to the point of what I'm showing is, the Monday's down day didn't wreck this play. And part of that was this is an important level. So, anchoring to that is the story of the day. Last play is Rocket Lab. And this thing, I'm not even going to try to make a rocket joke because those are too easy when the company's called Rocket Lab. But this thing just absolutely bonkers. We talked about this on a previous episode. Just a huge earnings day. This was just stupid high swing up here, and it's come back down. So around on the way up, once we cleared this previous resistance level here, once we cleared that and closed above, as we were approaching this next level of resistance, previous resistance, is when I sold this naked put. What I wasn't planning on was how massively up this shot. And I'm still debating whether or not I should have just bought the contract back, and closed out this play, because this shot up so much. I was in a day, I was up to, I think it was 60% of my premium, or 60% profit on the credit collected. So, since then I lost a lot of that on the volatility as we came back down, but as options do, a lot of it is coming back now because volatility is cooling off. We're starting to level out, and we're starting to show some tests here of this 14.5 level, which makes sense because when we go back in time, here we have that's was previous resistance. We're potentially flipping it to support here. So far, I'm really happy with this. This play was just big all around because I went Super Bowl on it. I sold this naked put. I took open shares. We rocketed up, and then somewhere I didn't. You never get the top, but once we saw signs coming down, I started selling off all my shares. Day traded it because it was so wild on this big candle day, and then as soon as we got signs of full on downtrend under VWAP, I bailed out on all my shares and just hung on to my naked puts that I have down there. And so far, this is cooking just fine in here. So again, back to the point of we can see, or at least I can see, the value of your entry and making sure you put your entry at an important point, not just a dart against the wall. Chart it out and wait for that good entry and spot your exits, because days like Monday will come. Worse days like Monday will come, and the last thing you want to do is be caught in the middle at a bad entry and just get squished out of it. Going to the S&P, this was what we, in the hedging episode, we obviously talked about this. I left these levels. I haven't touched these levels since we charted them on last episode. So real quick, I wanted to go back and look at what has happened in the I mean, not really crash, but in the retrace a little bit here, the pullback. What has happened, and has it held up to the levels that I previously charted? And so far, I talked about on the episode that I drew these levels. I'm certainly missing some levels, but I tried to pick ones that I thought were more important than others, especially like as you see when you see multiple resistance tests and it kind of struggles to break through and then it breaks through. So that's what I'm looking for to plot the level. Most of these levels on the index, I kind of stuck to the weekly just for a little bit, because obviously this is a little easier to see than the daily. The daily has a lot of noise in it. So I believe on the last episode, weekly was the most granular we went into. And so far, I mean, it's very well may not be done, but so far it's at least stalled at the first level I drew. We kind of came back down, got, just a little typical swing up and then down. And we're getting some daily support here right at this 43.90 level that I drew. And, again, I drew it, probably more official ways to word it or whatever, but kind of choppy levels where you kind of just see this stall out. So that's what pinged it for me, as well as this resistance that dropped down. And so far, I mean, this is holding up to the expectation. Obviously, the big thing is this where it stops, or are we now going to lose down to the 42.30, somewhere in that range? But so far, I'm pretty pleased with how the charting is panned out in this potential retrace. And this was, I guess I'm more, I don't know the word, excited about how because it was a new experience to try to chart just a run. I mean, this indexes in general, you don't get a lot of volatility. They generally run for a while. And so it was kind of, like we talked about on the episode, kind of a new experience to kind of chart that. But, I think even if you don't have a full on retrace new swing, there's plenty available to grab onto here. So far, first level hit, very well could lose it, very well could keep going down. The daily showing support here, but is it going to be enough support? Are we going to build support and start to get some higher lows? That's obviously the big question. But I'm curious on your side's Sprocket, um, how this stall out test here. I mean, this is we're now venturing into the hedge play that you had that you walked us through on the last episode. So how is that hedge play going? And we're still at the, as I recall, we're still at the kind of the top of your protection zone. Do you still have coverage down through the next level, I think? Or
Yeah.
what's going on with that?
Yeah, let's take a look at it because actually when I looked at the hedge that I put on here, it is a little different than the hedge we talked about last week. In the hedge we talked about last week, I used example strikes to talk about, which wasn't actually the hedge that I had put on. The hedge that I put on was slightly different, and I'm actually going to show you my real hedge that I had on, and a couple of lessons learned from this hedge, or at least I'll say thoughts to reflect back the next time I open one of these hedges. So let me go ahead and pull up my P&L chart here on the particular hedge. And so I hedged in the ES future, which is the S&P futures, and my long put strike was at 43.50. So we're just a hair above that. I think right now the futures are at 43.93, 43.96 looks like. And the short put of my vertical was at 43.90. And the finance put was out here at 29.50. Now, in this particular hedge that I put on, I did not do the double the naked put so that you can close it for 50% profit like we kind of talked about in the episode. But one of the things that I kind of noticed about this play, first thing is in Monday and a little bit on Tuesday, but mostly on Monday when we started challenging into the profit zone of this put vertical, one of the things that was happening here was volatility was increasing, which of course increases the cost of options. And the other thing that was happening is, you know, we're pushing down closer to my strike of this put. So my P&L chart was actually really low. Like basically the naked put that I sold to pay for it was going up in price, but the value of the vertical that I bought was also going up. So they kind of counteracted each other. I know it sounds weird because they're both going up, but because I'm short one and long the other, it has an opposite effect there. And so I kind of thought, wow, what's going on here? And really one of the bad things, I guess, that could happen with the way that I put this trade on is if I was to get challenged down in pretty deep quickly, you can see that this purple line is the value of the trade. And while I would be very safe until you get really far down here, what's going to happen is that's going to put buying power pressure on my account. And so as this purple line comes down, if I just take this price slice here and I slide this thing over, you can see on this top line here, this is the buying power required to hold the trade. And, you know, all the way up here, you know, I'm not requiring just a couple of 5K buying power, but as this purple line starts to fall, that buying power increases. And that puts pressure on your account. Now, you know, of course, that's going to come up as soon as things start to alleviate and time starts to decay. But when all your positions are diving and the buying power and net lick of your account is going down, it just doesn't help that much, at least with your mental health. And depending on how much buying power you leave in there, it could force you into a bad situation to basically run out of buying power and you'll get a margin call from your broker. So I thought about that and I thought, well, this never really happened before when I had put these hedges on. And I thought about it, and I think there's two reasons for that. The first reason is a lot of times I put these hedges on when it's not raining, and I've never had a rainstorm come so quickly. So by the time something starts pushing down towards that vertical, that naked put has already fallen off a ton of value. And in some cases, I've already bought it back. So I think the timing here is interesting, where is if your rainstorm comes right after you try to finance this vertical with your put, you're not going to see in your account balances the pressure relief from having the hedge on. So that's kind of the first observation. The second observation that I made was when I put this hedge on, I was very uneasy about the market as we finish out the balance of the year. I really just feel that there was going to be a pretty big correction at some point before the end of the year. And I really don't, Monday was not it. Monday was, okay, we had a little bit of a down day. I'm talking, I just feel like a 5% bring back on the S&P, something like that is what I'm trying to really protect for, 5 to 10% pullback. So I bought that vertical all the way out at December end of the month. So very, very far out. Well, I was just so used to always making the other trades in the same time frame. So when I sold that 29.50 put to pay for this, I sold it at December end of month. But if I look back, every time I go for premium selling, that's doesn't follow my rules. My rules are the theta really starts to decay when you get inside that 45-day window. And in index and futures, you want to get even closer, like maybe 30 days to expiration. And looking back, what I think I should have done is buy the vertical where I bought it, because that's the protection. That's the time frame that I wanted to protect in. But when I went to finance it, I probably should have considered an expiration much closer to now. And the reason for that is the theta is going to decay a lot faster. Now, the drawback is going closer to now to cover the full cost. I won't be able to go as far out of the money as a 29.50 put for sure. But if I sell closer to now, that theta is going to decay. And the sooner I can take off that put play as my finance option, the more that this vertical can just kind of sit and do its magic without worrying about this counterbalancing act. So that's some of my observations. I certainly don't regret it at all. I'm certainly very glad that I have this hedge on. And in fact, even today, you can see the, let me just pop this price back. The purple is basically the value of where this is sitting at right now. And so for me, I think this is up like 650%. I mean, the percentage is a little silly because the way that the spread is worded, the trade went on for just a couple of bucks credit. So the fact that it's worth a couple of $100 now is a giant percent increase. But if I take out that short finance put, you can see this purple line is the value here. And you can see that it really will pick up value should we start dipping down below there again. And as Viper said, we're really at that kind of critical juncture as another level that was identified. The run back today didn't really close above that other thing, in my opinion. I still think it's still being under test right now. So we'll see how it pans out. But yeah, that's the hedge play updated, Viper.
Yeah. So yeah, I think what's important, like you kind of mentioned there, what's unique about what we're analyzing with the hedge play is just this completely unexpected quick test of the hedge play. And, kind of like you said, this isn't the event the hedge play is on for. So this is a momentary, oh, that was interesting, sort of thing. So, I mean, it sounds like everything you said, it sounds like you're still like in the event that, we get some time because, like we saw on the SPX chart that I had, even if this isn't the level we stop at, even if we lose to the next level, this does seem to be presenting itself as a potential level, which means a potential time burn, a potential theta burn, before losing the level. Maybe we don't even get a good test off of it, but just a little chop, and then going down. So do I understand your play correct to say that some of that theta sideways, even if it goes down to the next level, that just helps alleviate some of the I don't know, quirks of this early drop that you saw?
Yeah, absolutely. So if we just kind of focus on this purple line here, as we kind of move out just in days, let's say we're not trading anywhere, you'll see that purple line is really kind of coming up in value. And what that is that's basically that naked put farther out there at 29.50 losing value from where we are. And so absolutely, each day that this trades, you can see this hump here significantly increases. This is as of October 12th. This is what this would look like. And so before, when I said we got a quick challenge, this was a very flat line as we kind of push down. And so as we now burn off more theta, especially that far out of the money, the theta will really start to accelerate as we move, weeks out there. And this will just kind of pop up in value. And you'll see that I won't get that buying power pressure that I talked about before, because we're not going to start really diving down this purple line until on October 12th. That puts that break even at like 3,700, and I think that's quite a few levels below where we are right now.
Yes, definitely. Which goes back to the power of the hedge, in that, as we've always said, when the bottom actually falls out, like when we saw in 2020, when an event is strong enough to really knock the bottom out, I mean, you can skip multiple levels, not even stall out on them. But at the same time, the play of the hedge is, like you showed, that 37 is potentially the break even, and at least on the chart that I drew last week, that's 1, 2, 3, 4 levels away. It's after the 4th level from here. So there can always be an unexpected event that really drops the floor out. But in the course of what I would consider a normal correction, I wouldn't expect that massive floor drop out, without some extraneous catalyst that you can't ever predict or expect.
Yeah,
so
absolutely. I do want to call out that the break even's not really there. That's where I start seeing buying pressure, buying power reduction pressure in my account, right? So this hedge, I'm good all the way down to 29.50. So that purple line is just the immediate value of the trade, and that's where, because this naked put is out there, and because there's so much notional value with that, the brokerage will put buying pressure on your account as you start challenging it. And that's where you can get into trouble, because if you don't leave yourself enough free buying power, it will force you into a margin call, even though if you hang on at that level, it might play out fine by the end of December. So that's the part that you have to pay attention to a little bit.
Gotcha. Yeah, that makes sense. So for context, break even being 29.50, where your protection is good till 2020's COVID crash took the S&P down to 21.50, and then within a few days, maybe more than a few days, it was a few weeks, we came back up to 28.50, and that 28.50 seems to be a pretty decent level. The swing obviously started down at 21.50, so everything's always at risk of going to 21.50. But yeah, 29.50 is not a bad place to be for that protection, since obviously, I mean, you can't really protect your way all the way. Like you gotta stop the policy somewhere to not drain all your money on the protection.
Yeah, that was the difference between the hurricane insurance and the flood insurance from last week's episode. So yeah, you could buy the put just straight up outright, and that'll protect you all the way down to zero, but you're gonna pay a lot of money for that.
So that's what I had as far as plays that I have on. Where and why entry points are so important, because like I said earlier, days like Monday are going to happen, especially when everything's on the tear that it's on. And it's when you're on those levels, sometimes it's not a hedge, but it's at least putting your feet on solid ground, have your exit ready, and clinch and stick to it because Monday there were times where I really, like, I mean, it hurt my daily P&L, like squishing all my plays to the level because I didn't buy, at the perfect bottom. You never will. So there was a cushion of from where I bought to the level that when every single one of them, except AVIR, was being pressed to that level, it was not a pretty day on my daily P&L. And the mental game started of, is this going to stop? Is this just going to keep going? And, I mean, I held firm of, no, like I picked these entries for a reason. And so far, again, the key was to continue to look at the chart, continue to look at the data, push the emotions out and say, no, look, we haven't broken this level yet. The balloon hasn't popped. So don't panic. And then, sure enough, within the last couple of days, everything's popped back up for the most part, to where that pressure's been greatly released on all those plays. So it's not an easy game, but that's the game.
No.
Stick to the fundamentals, man.
I think there needs to be a call out here to some of the mental games that be called. I know you referenced it a few times, but man, it's perfectly normal to have a day like Monday and feel very distraught in a lot of your positions. I know for me,
Yep.
on Friday was expiration Friday of last week, and I have been chasing Citigroup. Basically, when I say chasing it, I mean every month I sell an at the money put, and then it finishes out of the money, and I sell another at the money put, collect more premium. Well, I got assigned on Friday, and I was so excited. I said, "Man, I finally got my Citi shares. I got a great cost basis." And then Monday happened, and I was like, "Oh, I guess I could have waited the weekend and just bought in." And I mean, same thing with Apple. I wasn't chasing Apple as long. Basically, as soon as they had that Epic suit and they dropped, I sold an at the money put at 150 because I'm like, yeah, I'd love to go long Apple here. And I got assigned my Apple shares, and I said, yeah, I got these Apple shares. And then Monday happened, and I'm like, everything just went on sale anyway. And that was kind of it wasn't as much pressure as getting all your plays squished and your buying power, really cut down. But it was just very discouraging to see such a drop right after I went ahead and took assignment at a much higher price. Now I collected premium, so it wasn't too terrible, but it's definitely a mental thing. And yeah, whenever you start trading or any of that stuff, you have to have a lot of mental fortitude. I think it's very, very, very important.
Absolutely.
All right. Well, I think that's about all the topics that we have for this week. So we'll go ahead and we'll wrap it up. Just remember the theme of this episode here is when you open your plays, have your plans ready, your exit plan, both on the upside and the downside, and stick to your plan. You're going to be pressured at times. You'll never time the market right. And sometimes you're going to time it what seems absolutely horrendous. But be patient, wait for those levels, see your plays through, call them where your exit points are, call them upside and downside. So good luck this week. Hopefully things will be on the up and up for you and your portfolio, and we'll see you next time. Remember, think outside the block.